just business news, we're news for business people.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. And the general trade setup as of now looks extremely weak. Most of the Asian markets are trading with cuts of in excess of 2%. And the SGX Nifty is indicating a big downtick of almost 85 points. So the weak cues from Friday probably will continue as far as our markets are concerned. Even if you look at the ADRs, there were cuts all across the board. All the ADRs ended with a negative bias. The big drop coming in from the banking space. HDFC Bank was down 6%. You had ICICI Bank, which was down almost 4%. So overall, weak cues coming in. Even the larger ones like Infosys and Wipro, which managed to hold on in the Indian markets, saw a little bit of sell-off as far as the ADRs are concerned. Now, crude is trading extremely weak. Now, if you're looking at crude, it's down 1%. So Brent again coming back to the $67, $68 barrel per mark after reaching the $70 barrel per mark. And for the past 2 days, we've seen cuts in excess of 1.5% as far as crude is concerned. Metals, LME across the board, there was a sell-off that happened. Aluminium was down 0.7%. Copper was down over 1%. Zinc was down 1.5%. And a big sell-off in nickel, which was down almost 4%. Lead and tin managed to hold on. But even in China, if you're looking at it, everything is down close to 0.5%. Be it copper, zinc, aluminium or steel rebar, all of them are trading down close to 0.5%. At this point of time, there seems to be muted trade as far as gold is concerned, but silver seems to be trading much stronger. It's up almost 0.5%. So commodity cues are also extremely weak. Now, big sell-off happened in Friday on the market. If you're looking at it, what the FIs did, FIs were net buyers to the tune of 950 crores in the cash market, while DIs were net sellers to the tune of almost 509 crores in the market on Friday. Now, let's take a look at what happened with the wicks. The wicks was up almost 8%, given the fact that, there was significant amount of, weakness in the market. What fell in trade, the Nifty was down 2.3%, but look at the sell-off that happened on the broader market. The mid caps were down 5%. The small caps were down 6%, and the correction among the mid caps and small caps started a while back. Real estate down 6%, Nifty Auto down almost 3.5%. So, and Maruti was one of the main leaders, what led to the downfall on the Nifty index, Nifty Auto index. What contributed? TCS, Tech Mahindra, HCL Tech, a marginal amount of gains, but look at the sell-off that happened among the frontline counters. Reliance contributed 35 points downtick. HDFC Twins contributed almost 50 points downtick among themselves. ICICI contributed an 18-point downtick, and the others almost 158 points. But Agam is here. Agam, what are the FNOQs indicating?
Well, weak cues, Darshan, as indicated by the SGX Nifty, we are looking at a potential, decline, at least in the beginning of the session. What we've seen is unwinding in the futures as far as the Nifty is concerned, with a fall in open interest. Is the same for the Nifty Bank futures as well, which has also seen a decline of as much as nearly 7.5% with respect to its open interest in February. Moving in with respect to the volatility index, as one might expect, it has also gained, up 8% above the mark of 15. The put call ratio falls with the fall in the Nifty at around 1.08. Moving in terms of the changes in open interest, as one might expect, we have seen more writing in the 10,900 and the 11,000 calls. Very little change otherwise, as you can see from this graph. We have seen a bunch of stocks which move into the FNO band, so HDIL and India Cement. On the other hand, Gen Irrigation comes out of the FNO band. But do watch out for something like a Gen Irrigation. Before I come back to that, let me address PC Jeweler. The stock took a knock of nearly 25%, and we saw substantial unwinding with open interest down as much as 44%. And coming back to Gen Irrigation, again, we have seen the stock move down by as much as 8%, with unwinding of as much as 18%. So a lot of stocks out there have seen a considerable correction. You just have to wait and watch whether or not that correction continues as we move into today's day of trade.
Stock of the day is Thomas Cook. Good set of numbers reported by the company. If you look at the top line growth, we are looking at a 51% year-on-year growth for this company at a number of around 3,500 odd crore as compared to 1,988 in the corresponding quarter of the previous year. Net profit, the company has reported net profit of 10 crore as compared to a net loss of nearly 8 crore that we've seen in the December quarter of the previous year. Margins have shot up. Operational efficiency has come in by the company, 2.5-fold jump that we're looking at a number of around 120 odd crore as compared to nearly 54 odd crore that we've seen in corresponding quarter. Margins have shot up to 4% in this quarter. If you look at what goes behind the making of these numbers, will be higher revenue and also the lower other expenses along with your service costs. Now, service costs as a percent, your net sales has come down to roughly 34% as compared to 37% that we've seen in the corresponding quarter. Along with that, other expenses as a portion to your overall net sales, that number has come down to 10% as compared to 13% that we've seen earlier. In terms of segmental revenue, you would see major chunk of the revenue has been contributed by travel and related services, human resources services. Now, the contribution for that is roughly 43 and 52% of your overall sales. Travel services has roughly grown by 64% on year-on-year basis, while HR services has grown a good 49%. In terms of EBIT breakup, again, the two services that we've seen have contributed more to the operational performance of the company. Travel services, which contributes to around 25% of your overall business, has grown multifold to 34.61 crore as compared to roughly 25 crore that we've seen in the corresponding quarter. HR services, which contributes to 67%, that's a huge chunk we're looking at, has grown roughly 56% overall of your net, or overall of your EBIT for that matter. With that, let's toss it over to Jayesh for commodity market updates.
Thanks for that, Nikki. So we are looking at a 1%, almost a 1% decline for oil prices this Monday morning. Now, this is all on the back of near 1% fall that we saw for last week after oil prices posted the best January since 2006. Now, there are two primary reasons for the fall in oil prices. One is the underlying strength in the dollar, and the other one was the weakness in the stocks that is, now posing some concerns over the shale production. As far as base metals are concerned, most of the base metals declined on the London Metal Exchange, and the fall was led largely by nickel, which was down about 4%. Now, the sell-off was triggered by a spike in the dollar on unexpected strong U.S. jobs data. Nickel, which was the top loser, plunged as much as 5.8% and was down the most in over 2 months. While lead and tin gain about 0.5% each, copper and zinc actually declined more than 1% each. Now, similar cues can be seen from the Shanghai Futures Exchange, where most of the base metals are trading lower, except for aluminium, which is showing some bit of strength. As far as gold prices are concerned, it posted the biggest weekly loss of 2018, primarily led by the dollar index, which has shown some bit of strength. And talking about the dollar, Saloni Dhanuka is here to take us through the currency market update.
Thanks for that, Jay. So talking about Indian rupee, it's extended its losing streak for the second day on Friday and ended near 2-week low at 64.06 levels against the dollar. Now, for the week, the home currency was down by a good 51 paise against the dollar on the back of widening fiscal deficit concerns. Elsewhere, rally in India's foreign exchange reserves continued for the 5th straight week, and it touched a record high of 417.8 billion mark for the week ended 26 Jan. Moving on to debt market, yield on benchmark 10-year bond dropped 4 basis points to 7.56%, while in terms of flow into debt market, global funds increased their rupee debt holdings for the 6th consecutive session on Friday. They infused close to 450 crores according to NSDL data. Domestically, traders will be turning their attention to RBI monetary policy meeting this week. Analysts expect RBI to keep interest rates on hold. However, they expect that the budget could toughen central bank's tone this week. On the global front, as Jayesh mentioned earlier, dollar index snapped 7-week losing streak after monthly jobs data surpassed expectations. Now, the index rose as much as 1% against other major currencies. However, it ended 0.6% higher, well above the 89 mark. In fact, it was the top performing currency on Friday. Other major currencies like euro, yen as well as pound weakened against the dollar by almost 0.3%. While coming back home, dollar rupee is now trading at 64.13 levels against the dollar in a non-deliverable forward market, which indicates a weaker opening for Indian rupee in today's trade.
Well, among the stocks that we're tracking today morning is Bharti Airtel. Now, Singapore Telecommunications has said that they will invest 2,649 crores in Bharti Telecom, which is the parent company, and these funds will be used for debt reduction. And in fact, Singtel's economic interest in Airtel will increase by 0.9% to 39.5% after this transaction. You also have GMR Infra, which will be in focus. Now, its subsidiary GMR Airports will buy additional 11% stake in GMR Hyderabad International Airport, and that will be for a consideration of $76 million. That's close to 484 crores. You also have an ET report which says that Jaiprakash Power Ventures has offered to sell its Nilgiri project to NTPC, so keep an eye out on that name. That apart, you also have an ET report which says that Mahindra & Mahindra has bagged 110 crore worth order for electric vehicles. We're also tracking Binani Industries, which could be in focus again on the back of an ET report which says that bidders are likely to get another shot at Binani Cement, for which it is the holding company. Orchid Pharma, again, it's almost a penny stock now, but again, a ET report which says that Blackstone, Strides, Arcolabs, Nectar Life Sciences, all these three are leading the race to acquire Orchid Pharma, so keep an eye out on that name. You could see some positive reaction there. Arshia is another company on the back of an ET report which says that they have sold 6 warehouses and leased them back to be able to implement an asset-light model for the company, so that's good news for the company. That apart, we're also watching out for JBM Auto, where its Italian partner has terminated the joint venture agreement with the company, but JBM Auto has said that the JV will continue with its existing business. That apart, what we're looking at is Sanghi Industries, where the company has approved issuing or raising funds via NCD and bonds, and that will be for redemption and prepayment of existing debt. That apart, we're looking at Mangalam Organics, which will buy back 6.74% of its equity at 230 versus the closing price of 207 per share. So all those are the stocks that you need to track and trade today. Another one that will be in focus is Bhushan Steel, and for that we have Vishwanath who's standing by with the latest details on the bidding for the company.
Hi, Shraddha. So what happened on Saturday was that there was a bidding process that closed at about 6 p.m. And through this bidding process, which is under the insolvency and bankruptcy process, 2 domestic steel makers have submitted their bids. There was Tata Steel, which has been already in the news, and they have been looking at multiple stressed assets which are under the insolvency process. There was also a consortium that is led by JSW Steel in a 50-50 joint venture with a fund that is promoted by Piramal Group as well as Bain Capital. So these bidders have submitted their bids as of 6 p.m. on Saturday. Now, what we understand is that the JSW consortium has bid the bid amount that they've placed is between 25 to 30,000 crore. We weren't able to ascertain what exactly Tata Steel is bidding for the company, but suffices to say that this amount, this 25 to 30,000 crore, is roughly double of the liquidation value of 15,000 crore that was determined for Bhushan Steel by the valuers. Now, liquidation value typically is the value that you can regain from a company whenever a company goes into liquidation and if the insolvency process fails. There were also news reports stating that ArcelorMittal has submitted a bid. There was some confusion regarding that over the weekend, but a spokesperson for ArcelorMittal has confirmed to Bloomberg Quint that they did not, in fact, submit any bids for Bhushan Steel through this process.
Okay, some of the auto sales numbers that came out over the weekend and on Friday. So it seems like it's a good season, that a good start for the auto sales number in the month of January. If you're looking at it, let's start with the two-wheelers first. Bajaj Auto was up almost 46% year-on-year sales. Hero MotoCorp, TVS Motors and Eicher Motors, all of them grew almost 30% in this year. So it's a decent start for the two-wheeler company. As far as the four-wheelers are concerned, Tata Motors led the way with a 43% jump. M&M tractors, M&M, Maruti, all of them saw traction that come in. Maruti was the low one because that came in on a low base. So apart from it, on a high base, For Maruti, it was strong demand for Brezza and Baleno. They led the rally for coming in for Maruti this time around. Tata Motors, it was strong demand for Tigor, Nexon as well as Hexa that helped the company. For the commercial vehicles, there was demand from the logistics and infra company, which aided the sales growth number that came in. And as far as the two-wheelers are concerned, strong rural demand was seen by them, and given the fact that what happened in the budget, there could be this demand traction could continue. But overall, decent start for the auto sale company, auto numbers that came out in the month of Jan.
Well, among other stocks to watch, first up we have PC Jewelers. That was arguably the stock of the day on Friday. Was down about 25% and saw delivery selling of nearly 500 crores. The delivery volume, however, shot up just about 165% at nearly 1.5 crore shares as compared to its 5-day average, and the total volume spiked more than 4 times at about 14 crore shares as compared to its 5-day average. Tata Communications, the second stock to watch out for. It ended 1% lower and saw delivery selling in excess of 50 crores. The delivery volume was up about 170% at nearly 9 lakh shares as compared to its 5-day average, and the total volume spiked about 85% at nearly 16 lakh shares as compared to its 5-day average. Last and final stock to watch out for would be Idea Cellular. It was down about 3.5% and saw delivery selling of 75 crores. The delivery volume more than doubled at about 85 lakh shares as compared to its 5-day average, but the total volume surged just about 34% at nearly 2.5 crore shares as compared to its 5-day average.
Previously, we are having the right now we are having the 1,500 on the treasury fund. Previously, it was the policy that 75% of the company's fund or treasury fund will be invested into debt fund, and 25% will be invested into equity fund. So we made certain investment. In certain investment, PC Jewelers was also there. We made certain investment. But after when we when we bought the 20 lakh shares, that come to the NSE website. So lot of shareholders has asked me. Lot of shareholders has objected and suggested you should not do this. And they have given me because Vakrangee should focus on their business only. They are not having the expertise to invest in the equity, directly equity. So you just see the corporate governance of the company. I immediately called to the board of directors. I convinced them my lot of shareholders are not agreeing on this trend. So we immediately changed the policy. We immediately changed the treasury policy and informed to the BSE NSE that nowhere in the future, no amount in the future will be directly invested into PC Jewelers or XYZ any equity. So right now we are having the 100% policy. 90% will be invested into directly in the debt fund, and 10% only can be invested equity through mutual fund only. There is no direct investment. So see what management has immediately changed its policies of them, and there was objection from the sales. So it's a one day only. After just buying we got the objection, then I immediately called the board director meeting, convinced them this is not fair according to my shareholders' view. So I changed the treasury policy. So again I am committing now, in future there will not be any directly investment into. So this is not a serious issue. This is a treasury fund is there. Nothing lost in that. I also invested in the lots of other companies also. I benefited there. So right now I close the thing. In future I am committing. So I am assuring you I will follow.
So you are an individual, sir. So if you invest in your personal capacity, sir, no one is questioning it. The question arises, why are you investing company money?
I never invested. See, Mr. If you see my personal balance sheet, I am owning only and only Vakrangee share. Okay. I never invested. But as per treasury policy, treasury committee is there. If treasury committee decide to invest into XYZ, so how can I object? There is a report there, something there, but there is a policy matter. This is not a matter of particular script. My shareholder didn't object on a particular script. They objected the policy because Vakrangee management or Vakrangee treasury is not having the expertise in the equity investment. You should not equity. You should invest into the debt fund only. So immediately I changed the policy. So why are you focused? Or everybody is focusing this point to the particular scheme. I am telling you this is policy. So Vakrangee is a corporate government company, professional run company. We run on the procedures and policies. So when we change the policy, we will abide the policy definitely in the future. So I am assuring everybody, we will follow the policies of, we are also releasing shortly capital allocation policy.
No, sir.
So we will we will also take the suggestions from the shareholders.
Is Vakrangee, you bought 20 lakh, sir, you bought 20 lakh shares of PC Jewellers. I am asking, are you still holding after
I don't know, but I don't know in particular which shares they have sold. Already Treasury Committee has decided to not to buy furthermore and liquidate into this quarter. So in this quarter, my whole equity will be sold out. So I cannot comment on special shares, special script which I have sold. So I am telling you, I cannot comment.
The big brokerage calls for the day. First we have is Macquarie and Bajaj Auto. Now they have maintained the underperform rating on the stock with a target price of 2,900. On the third quarter of financial year 2018, the company reported a lower than expected operating performance. Now the sales volume grew 18% in the third quarter, driven by strong growth in the three-wheelers and in the export market. However, on the domestic motorcycle front, the market share continued to decline as the new models have not been able to sustain the initial momentum. Exports grew in the third quarter of financial year 2018 strongly off a low base, and going forward the near-term outlook on the three-wheeler market is very positive, but the company is expected to see a slow growth in the domestic motorcycle industry in the financial year 2019. Second we have is JP Morgan on Hindalco. Now they have maintained the overweight rating on the stock with a target price of 335. Now in the third quarter of financial year 2018, the company reported a miss in its EBITDA and net profit front. Now the standalone operations did not fully capture the earnings strength that the company saw in the overall market. The prepayment of debt continued for the company on the back of strong free cash flow generations. However, going forward, there is a limited upside in the fourth quarter of financial year 2018 because of the price hikes and coal prices taken by Coal India. Also, capital allocation by Hindalco going forward will be a key monitorable according to the brokerage. Third, we have a CLSA on Godrej Properties. They have maintained their buy rating on the stock but have marginally reduced the target price to 1,058 from 1,070. Now, the third quarter results of financial year 2018 were below estimates because of lower margins. However, cash flows were good, which led to a fall in net debt for the company. Now, pre-sale surge continued in the third quarter. It was up around 77%, indicating a major scale-up in progress. Now, project additions continued in the third quarter of financial year 2018 as smaller players were exiting from the industry. Now, going forward, Godrej Properties is expected to be a key beneficiary of consolidation and exits in the real estate industries. Also, Godrej Properties remains a top pick for CLSA in the real estate space.
Okay, the big number for today will be Tata Motors. As far as the consolidated numbers are concerned, we are seeing close to a 16% growth on the top line. As far as the margins are concerned, we are seeing margins of almost 12.5% versus 9.7% that came in on a low base last time around. And profits will be up almost 21 times on a very low base last time around. So we are seeing 2450 crores of top line of profit versus 111 crores that was there. Some important factors and that we need to watch out, and that is Jaguar Land Rover. This time around, we are seeing a forex loss of almost 350 million of British pounds that we are seeing this time around because of a one-time rebate. There's also a one-time rebate to dealers in China because that will impact the JV profits. And finally, JLR margins are seen at 12.5% versus 10.1% last time around. As far as the domestic business is concerned, we are seeing margins of 8.6%, volume growth of 29%, which probably will aid margins. And there are no numbers as such, but Motilal Oswal note indicates standalone profits will be close to 130 crores this time.
Now, we've already taken you through some of the big stories that are on the website. Do look up the update on Bhushan Steel's debt resolution. There are also some other stories that you'll find if you log on to BloombergQuint.com. First up, in the US, Jerome Powell will be sworn in as the new chair of the Federal Reserve today in Washington. In an interview that aired over the weekend, outgoing chair Janet Yellen said US stocks and commercial real estate prices are elevated, but stopped short of saying that those markets are in a bubble. Now, Reliance Industries will invest 2,500 crore rupees in Assam in retail, petroleum, telecoms, tourism and sports creating over 80,000 jobs over the next 3 years. The company's chairman, Mukesh Ambani, made this announcement at an investor summit in the state. Well, that's all we have time for on this edition of All You Need to Know. But up next is Indian Open. Do stay tuned. This is Bloomberg Quint.